Okay, let's talk about how Wall Street is financializing Bitcoin and what covered call ETFs mean for the Bitcoin price, for volatility, and also for retail investors who don't generally understand this concept of what BlackRock has just launched in their iShares Bitcoin Premium Income ETF, which is BITA, which started trading on the 16th of June. And really became the first yield generating Bitcoin ETF from a major asset manager. And this BITA writes call options on 20 to 35% of IBIT's holdings monthly, targeting 15 to 25% annual yield while retaining at least 70% of Bitcoin's price appreciation. And that 0.65 expense ratio undercuts competitors while retaining at least 70% of Bitcoin's appreciation. And we see competitors like YBTC 0.95 and BTCI at 0.99. Which is really where BlackRock is looking to have its competitive advantage. So we had to do a forensic map of this financial instrument and what it does to holders, the Bitcoin market structure itself, and the options ecosystem that prices it, right? So the central finding, I think, is that covered call ETFs, at the end of the day, a yield transfer mechanism, and they convert potential capital appreciation into current income, which sounds attractive until you model the returns over a full Bitcoin cycle. And this is what we wanted really to look at here, the common threads, like financial engineers extracting fee income from complexity that retail investors don't fully price at the market structure level, growing beta and covered call ETF assets under management creates systematic options dealer hedging flows that suppress Bitcoin's realized volatility, right? Create gravity towards specific price levels at option expiry, and benefits those sophisticated traders who can structure the offsetting position. So this is what's been going on behind the scenes while everybody is screaming that Bitcoin is dead, the bear market is here to stay, and these players are really making power moves. Bitcoin was once one of the cleanest assets in crypto. You own the asset, you pretty much hold the scarcity, and you capture the upside. Now Wall Street is doing what Wall Street does, right? Turning a simple asset into a structured income product. BlackRock's iShares Bitcoin Premium ETF, the BITA, gives investors Bitcoin exposure while generating monthly income through covered calls, which, like I said, it sounds really attractive, but Bitcoin does not pay a dividend, right? So the yield comes from selling call options, which means investors are being paid today in exchange for giving up part of Bitcoin's future upside. And I think these are the things that need to be paid more attention to in the markets right now to see where the opportunities still lie. And like I said, for income focused investors, that might be useful, right? If you need monthly cash flow and would otherwise sell Bitcoin anyway, BITA makes sense. For long-term bulls, right, it's a different story. If your thesis is that Bitcoin goes much higher over time, then selling away part of your upside may work directly against the reason you bought Bitcoin in the first place. And the bigger point is that BITA marks a new phase in Bitcoin's financialization. Spot ETFs did give institutions access, and like I said, covered call ETFs turn volatility into income. Now that we're seeing the next will come more structured notes, maybe buffered products, options, overlays, and yield machines. And some will be useful, some will be misunderstood, and the lesson for investors should be simple here. Do not just look at the yield, understand what they're selling you in order for you to receive it. And what you need to do is just check out the full breakdown and do the calculations with the proprietary tools that we've built, which the link to the full guide is in the description, and let me know what your thoughts are. Is this the future of Bitcoin, where we're going to see a lot of suppressed volatility? Let me know your thoughts. Like, share, subscribe, turn on the notifications, trade on the very best exchanges using the affiliate links in the description so you can get the best fees, the best discounts, best rebates. That goes a long way into what you actually spend when you're investing and trading in the digital asset space. The links to the best exchanges in the description below. Like, share, and subscribe. I'll see you guys next time. Peace, y'all.